Welcome to Momentum Trading Group Stock Market Basics. This again is just going to be a basic overview of the stock market, just so everybody's on the same page and gets familiar with what the stock market is, how it generally works, just some basics. So just if you already understand this, then just be a good review for you. What is the stock market? Plain and simple, it's an auction where companies sell their stock in an effort to raise capital to grow their company. Buyers and sellers of the company's shares are able to buy and sell stock at an exchange. One of the ones you're probably most familiar with would be the New York Stock Exchange. So a lot of what you'll hear us talk about are indexes, and a lot of people get confused with what an index is versus what an exchange is. An exchange is where people actually buy and sell. The New York Stock Exchange or the NASDAQ, which is electronic. That's where a lot of people get confused, is when they think of the NASDAQ 100. That's the top 100 companies, but on the NASDAQ there are thousands upon thousands of stocks being traded. An index is used to track the value of a group of stocks. The Dow Jones Industrial Average, or the Dow Jones Industrial, is comprised of 30 stocks, of which trade on the New York Stock Exchange. So that's where you can get a little bit of a lapse there. The S&P 500 is a group of the top stocks in the world. I like to think of those as global leaders, and then the NASDAQ 100 is primarily technology-based stocks. So one thing you got to remember when you're talking about the stock market is the markets will always move basically together. The four that we follow are the Dow Jones Industrial Average, the Dow 30, the NASDAQ 100, the S&P 500, and the Russell 2000. So the way you like to look at this, they normally will say that the best economic indicator is going to be the S&P 500. The other side of it is going to be the NASDAQ 100. Those are going to be a lot of your momentum stocks, so be aware of that. You want to look for the momentums of the market. The Russell 2000 are going to be a lot of your growth stocks, so the up-and-comers in that respective field. And then, like we said, the Dow Jones 30 are kind of the biggest industrial stocks. Now, the next breakdown that you have sectors. Now, what this is a group of similar companies that are put into a group, so they're just into sectors. Now, in the S&P or the NASDAQ, each of those will have their own sectors. There's going to be approximately 9 sectors in the S&P, but there are primary sectors that really drive the overall markets, which we're going to talk a little bit more about. So a basic breakdown from index sector to stock on how that would break down. The Dow Jones is primarily made up of 2 sectors, the transports and utilities, of which in the transports you have companies like FedEx and UPS, and then in the utilities you have one like Southern, which some of you may not be familiar with, but General Electric, something like that, may also be similar in that area. And then in the S&P 500, again, it has more sectors than this, but 2 of the larger ones are going to be the financials as well as energy. They're going to be made up of Citigroup, JP Morgan, and Chevron, ExxonMobil, stocks like that. So just be aware of that's how they break down, and it creates basically a pyramid. Now, the thing to be aware of as it relates to the Dow Jones, the market versus sectors, is you'll notice that the primary sectors of the market, when opposed or not working together, create different environments. So an example would be a market bottom is indicated when you have transports, which shows economic growth. And think about this, if companies are shipping products, they're transporting those products, because things are coming off the shelf. Utilities tends to be more of a gauge of commodities, so commodity prices tend to be going down at that time frame. When both of them are working together, that would indicate an uptrend. We're going to look at charts of that process in here in just a second. And then in looking at the market top, similar thing, transport starting to go down, utilities are going up, means commodity prices are going up. It's costing you more money to heat your house, it's costing you more money to do all of those types of things. So just something to be aware of. And then a downtrend is when both of those sectors are moving lower. So you can see how you can just gauge the overall Dow Jones composite itself, Dow 30, and really what kind of state or environment we're in relative to how the individual sectors of that market are doing. Okay, so once we've got that, then we want to compare that to the actual S&P. S&P, similar thing. Energy and financials are going to be its two major sectors and how they play together. When energy is going down, financials are going up. That can be a great indication of a market bottom. Uptrends are when both of them are working together. Market top is when energy is going higher and financials are coming down. Downtrend is when both of those are going down. So just be aware of that. So when you identify that, now you would have, in this instance, 4 potential sectors between the Dow and S&P. That would put you into, again, like we said, transportation, utilities, energy, financials, and then you start looking at the NASDAQ, which is primarily technology-based stocks, and that will also have its influence. Next thing we want to talk about is what's the futures market? Why futures? Now, what the futures is, it's an auction where participants can buy and sell futures contracts for delivery of a specific specified future date. So the idea is if you're able to buy an S&P futures contract, you're anticipating that from the date that you got into that contract, by the end of that day, that contract is going to be worth more money than when you bought it. And same thing vice versa. If you think the market's going to go down, you have the ability to say, I want to sell the S&P at this particular date at sometime in the future. And if the market falls, then that will cause that contract to increase in value. So we're going to talk a little bit about that. Again, S&P 500, just as a review, the S&P is one of the most commonly used benchmarks in the overall U.S. stock market. The Dow Jones Industrial Average was at one time the most renowned index in the U.S. stocks, but the Dow Jones contains 30 companies where the S&P contains 500. Okay, so that's just a basic rundown for you. What I'd like to be able to do now is be able to go to some physical charts and just kind of walk you through how we do the analysis that we just went over. So the very first thing we want to do is we just want to take a look at the 4 broad markets that we've already discussed, which are going to be the Dow Jones. So we'll go ahead and pull up the Dow Jones. And what you'll notice here is the Dow Jones failed to put in a higher high. So you can see how we have a little bit of resistance. I'm just going to draw a rectangle here so you can see that. And then we're going to change that color there, just to indicate we've got some overhead resistance right there. You can see how it's come down. It's basically back up to that level. So that would be the Dow Jones. Now the next thing we would do is we would want to get an idea of how do the sectors of the Dow Jones actually look? What are we actually seeing there as relates to that? So we pull up the utilities. Well, you can see relative to that same time frame, utilities still has some room to run, because it's not back up at that level yet. Okay. And then at that point, let's compare that to the transports. And you can see the transports has been back up to that high, but it has also failed to take out that high. So what we could say is if this thing starts to move higher, we're really going to lean on the utility sector to really give us a good feel for what this is going to do, because if this particular market starts to continue to push higher up into here, that's going to push the overall broad markets up. We still have some room here for this to go. But you can see when this thing was moving lower, that was the major drop that we had on the Dow Jones Industrial Average. If you go back here and see this same little drop here, that was caused by all of the sectors were going down, but really was being driven down by the utilities. Remember, if you go back here and see the utilities, major drop off those highs. So from peak to valley, that's 40 points. That's a 12% decrease in value. See how it came back right to this support level, which we're going to talk about in some later videos. But you can see that we've got kind of this range on those particular markets. So something to pay attention to. Now we'll take a look at the S&P. S&P is above those highs currently. So you can see how this would be considered a relative strength or stronger market. And then we'll compare the sectors that make up the S&P to get a gauge. Now see where these highs are? You can see how energy has been the weaker market. It's come down and start to come back up, but it's really not moving up like the actual S&P. And then we go look at financials, and then we see the culprit of what's driving this market higher. Right through here. So that same level. So just to recap, if we look at the S&P, you can see how the S&P is back above these levels. Well, what's been driving that? It's not been energy, because energy is still below those levels. And then when we compare that to financials, now we see what's been driving the S&P. Financials has been a stronger market. So remember, if we go back to our analysis and we talk about the energy sector versus financials, when both of those are working stronger, that's when you're going to have these major moves in the market. While financials are still moving up and energy is kind of moving sideways, that means you could possibly be getting near to a market top. But just something to be careful of, because even though with energy right now, having had gone down, it's still in an uptrend overall. So just keep your eye on that. Now the NASDAQ, we like to look at the overall NASDAQ and compare, wow, it's really put in its highs. This has been the stronger market. We'd really want to be buying this market versus the S&P as well as the Dow. And then this is also a gauge of momentum of all the momentum stocks and a lot of those other companies that make up the current bullish movement that we're seeing in the market. NASDAQ tends to be the driver. And then the final index that we want to look up is the Russell. Now you'll notice that the Russell of all of the markets really truly is the market that we would identify as being sideways. Again, look how far back this goes. This indicates to us here that not a lot of movement, not a lot of good price action. The Russell, again, is well below its highs of those other markets. So this would be the weaker market. Now what that says is if the Dow Jones, NASDAQ, and S&P start to curl over and go down, this is really going to have a major drop in the markets, because you can see it's nowhere near its highs. Versus, again, if we go back and just drive back through the broad markets here, just so you can see it. You can see the Dow Jones is back up at those highs. You can see the NASDAQ is above those highs. You can see the S&P is above those highs, but getting pretty close to the barely peaking out. And you can see the Russell is below. So again, strongest market is the NASDAQ. That would be one of our safer bets there to be looking at. But again, we got to pay attention to all of the markets, really get a good feel for what we're looking at, how we're analyzing those markets, and then really getting a good comfort level of being able to break that down and take a look at that on a much deeper basis.